Hello, my name is Patrick Baranowsky. I'm a longtime Certified Divorce Financial Analyst and the founder of Baran Analytics. I welcome you to my video that explains the characteristics, issues, and remedies for high asset, high net worth divorces. Divorce financial analysts compose a specially trained and certified subset of the financial analyst industry. I've been helping clients achieve prevailing results in high asset, high net worth cases for over a decade, so I want to present you my unique and informed perspective. If you're interested to check out other important topics of divorce, I encourage you to check out my website blog, my live meetups, and my other YouTube videos. You could also contact me directly. I'd like to start today's discussion with an important mantra regarding the divorcing process, which is particularly relevant to high asset, high net worth divorces. Achieving a prevailing divorce settlement may be sophisticated, but it need not be difficult. Settlement is sophisticated because it involves detailed financial transactions involving many different artifacts moving quickly under a microscope. Settlement need not be difficult because divorces are common, so diverse expertise and ample tools exist to navigate the divorcing process. My high asset, high net worth video series includes 3 videos to canvass the important topics that you need to educate yourself. First, we'll discuss the distinguishing characteristics of high asset, high net worth divorces. This provides a solid foundation to better understand issues and remedies discussed in subsequent videos. The divorcing process and many aspects of settlement are quite different for high net worth and high asset divorces and should be treated accordingly. So much is at stake, and remedies are so much more sophisticated. You simply cannot expect a prevailing settlement without educating yourself and assembling an exceptional team of legal and financial experts. For these types of divorces, you will see that it is critical that you rely on both legal and financial expertise. Do not compromise yourself and your future standard of living. So, let's discuss what characterizes high asset and high net worth divorces. Some characteristics are unique to these types of divorces. Other characteristics may not be unique, but their magnitude and complexity far exceeds those of typical divorce cases. First, income is one of the most important metrics to affect a divorce settlement. It forms the basis to determine equity, alimony, and child support. However, income may be more complicated to estimate for high-earning households because of a prevalence of non-traditional income sources. For example, senior corporate employees may receive deferred compensation such as RSUs and stock options. Jeff Bezos and Elon Musk had less traditional salary than even average households, but earned hundreds of millions of dollars last year from non-traditional income. To complicate matters further, the value of income for many of these income instruments can be changed significantly and sometimes do so every minute as the stock market fluctuates. To the second point, the top 10% of families have a median net worth of almost $4 million. In addition, wealthy families tend to marry later in life. This means that a sizable portion of this net worth can be ruled to be separate property by the courts. However, the tangled web of transmutation and commingling can be quite complicated to trace and quantify this separate property. I've had clients argue that millions of dollars should remain fully their separate property, and I've traced the movement of separate property that moved through nearly 24 instruments throughout a marriage. The third point recognizes that the greater the earnings for one person, the greater the prospect that that person earns much more than their spouse. The upper 10% of the nation earns about $220,000 per year. Reverse logic obviously states that there is a 90% chance that the spouse makes less than that. As I look deeper into these demographic statistics, I found that there is a 50% chance that one spouse earns at least $160,000 less per year than the other. So about half of these high-earning households have one spouse earning more than 75% less than the high-earning spouse. Understanding these distinctions has significant consequence to spousal support, child support, and other equity provisions of a settlement. For the fourth point, with so much wealth invested in assets and with greater collateral available to secure debt, these households commonly have much more sophisticated portfolio of assets and debts. Examples of these diverse assets include real estate holdings that include primary residence, vacation homes, and investment properties, business interests that include ownership stakes in companies and professional practices, more sophisticated types of insurance policies, investment accounts including stocks, bonds, mutual funds, and other securities, advisor accounts, derivatives, hedge funds, and crypto, retirement accounts such as 401ks, IRAs, pensions, KEO, SEP, grants, options, and restricted stocks. Related to the scale and types of assets held, many high-earning households further complicate divorce settlements because they manage investments through sophisticated investment accounts. When present, the fifth point many times is the focal point of a divorce. Whether as an owner, a senior executive, or an investor, more wealthy households are more likely to participate in business ownership. This ownership can be a complicated form of income and/or an asset. This means that your settlement may be predicated on assessing the cash flow income of the business and/or determining the fair market value of the business. For the sixth point, with at least one spouse bringing a sizable equity into the marriage, prenuptial agreements occur more often in wealthy households. These agreements can define how assets should be divided and how the less wealthy spouse should receive alimony. Many times, these terms include contingencies that also need to be considered in settlement, but the interpretation of these agreements often are contended. The seventh point is a natural byproduct of owning a more sophisticated and larger portfolio of debts and assets, more non-traditional income, and likely business ownership. These households are more likely to employ different types of legal and financial professionals to participate in many aspects of their lives and careers. Many of these professionals have information that is valuable for the divorcing process. Note that, even if properly trained and certified, for which they rarely are, your tax accountants and financial planners cannot act as your divorce financial analyst experts because doing so would present a conflict of interest in the eyes of the court. That's why I focus strictly on divorce financial analytics and am certified specifically for that. Any tax or financial advice that I offer my clients is provided through the lens of a divorce settlement. For the last point, wealthy households obviously own more equity in all aspects of their marital and personal estates. Meanwhile, the hourly rate for attorneys and divorce financial analysts are the same regardless of their client's wealth. As a result, the value of more arguments are likely to exceed the cost to litigate each argument for more wealthy households. As a result, more arguments are litigated and make financial sense to do so. However, please note that understanding which arguments to litigate is not always so obvious, and attorneys often just go with their gut. You should base decisions on something more substantial. So I always offer to help you and your attorneys to quantify the risk and reward for each issue. That concludes my video discussing the characteristics of high asset, high net worth divorces. I encourage you to view the next 2 videos in this video series to gain a more comprehensive understanding. Remember, achieving a prevailing divorce settlement may be sophisticated, but it need not be difficult. That is especially true when you have a certified divorce financial expert that can appreciate the daunting situation you are facing and cares to understand you and help you understand his advice. It's all about you. Please consider subscribing to my channel by clicking the subscribe button below. If you gained any valuable information from this video, please click like. If you are interested to discuss further, please contact me directly. My contact information is available on my Contact Us page of my website, barananalytics.com. The URL is shown at the bottom right of this slide. I look forward to talking to you soon. Thank you, and I wish you well.